Good evening, this is Nick Imnan from VolumeProfileTrader.com on Friday, November 11th, and we're going to get this weekend update out today, so all you viewers can have an opportunity to watch it at your leisure this weekend. So let's jump into the S&P here. Today we had some follow through to the upside, so it looks like Wednesday, for now, was a one-day wonder in terms of a sell-off. It really, to be honest, it threw me off only because it looked like we were going to break out, and when we opened up lower at the 1245 level, that was fine, and I put out a morning video on Wednesday morning and was talking about how don't panic and sell, look for a bounce, and we didn't get that bounce, and you saw when we didn't get that bounce, we did have a huge sell-off, but it did just go straight down to support, which I'll show you in a second. But let's jump into today's action. This is a 1 week chart, week to date, so this chart is done and it will reprint next week, but what you can see here is our point of control for the week finished at 1244. Value area high 1256 and value area low 1224, and you can see last night once we broke above yesterday's, generally speaking, yesterday's highs, that really the point of control for the week, we formed another little consolidation pattern, a little triangle pattern, and then we saw a nice breakout to the upside. Now, it wasn't anything significant, but we had follow through. So buyers at support back at these lows, you were rewarded at the end of the week holding into Thursday, buying the lows into Thursday, and holding into Friday. Now, just to give you my perspective of Monday, watch this high volume area that formed late afternoon. Let's get you the exact levels. Let's call it 1260 to 1264, and watch out for basically a sell-off from those levels. And really, just looking at the weekly chart, this week chart, it looks like 1245 would be a target to the downside. However, the market trades on more than just this time frame. So let's zoom out one and show you what's going on. Okay, so that sell-off on Wednesday had a big drop, but we found support at this trend line, which has been support multiple times, and now it looks like from this chart we're going to break out to the upside. It looks like late afternoon a flag pattern formed, and there's potential for more upside in this. However, I guess the important thing is wait for the pattern to develop. If we get a pullback to this 1245 level, let's call it this high volume level in general, 1230 to 1245, let's call it. If we get a pullback to those levels and see a bounce, I would suggest getting long on that bounce with a stop at the lows. And the reason why is because this trend line that we've seen hold up, people are buying on the weakness, and this November point of control, it's interesting. We had basically we tried to break out of this of this range. We had resistance, and then we broke out of that, and then we found support at these levels, moved higher, and then basically took a crap down to back to the lows, back to the support. Thursday we consolidated at those levels. I talked about in last night's video, and Thursday saying, the market closed pretty well, and sure enough we saw follow through. So this looks pretty interesting, and I think it's something that people, that you should have some money at risk right now to the long side, but realize that any Europe risk is out there and it can crush the market. But if the market moves higher, which, there's a likelihood that it can. Markets move higher, markets move lower. Our job is to determine which way's the highest probability. And from the looks of it, it looks like this market has an opportunity to go higher. This downside, it's not a trend line because it's just, all it is connecting two recent highs. So if we get some selling at these levels, the 1270 level, and then a pullback, if we catch a bid, if buyers come in at this 1245, 1250 level, which is ultimately where you want to see them, and you're not involved in the market, I would recommend buying some with a stop under those lows. You can even have a stop as far as let's see, the Wednesday's lows, or Wednesday or Thursday's intraday low. And basically what it gets you involved, but you're managing your risk at the same time. So let's move on to other names and a few trading ideas that we have. Okay, I'm going to highlight Avigo Technologies. And the reason why is because I think it has a lot of potential. If you're not already long, I suggested this a couple of days ago, but what we're seeing here, generally speaking, is we have a little triangle pattern right at the point of control, and we're looking for a breakout to the upside. Today we saw it outperform the market by it was up 3.5%, and the market, I believe, was up around 2%. So this looks good right here, right now. I would have a stop under the lows from Thursday, which is around 32.80, and price right now is at 34.29. So $1.50 in risk, about, judge your risk in dollar terms. So how much you're willing to risk, $1.50 times however many shares, and your upside, we're looking for about 37.50. And so as I zoom out, you can see another target would be the highs for Avigo Technologies, which is around $39, maybe even $40. So we have a decent upside in this. It looks poised right here, right now, to really get moving to the upside. And earnings for this name are December 1st. So there's still some time for this before you have to worry about earnings come out. Maybe it's going to give us a pre-earnings run. So what that means is a run prior to earnings, and then once earnings come out, they often sells off after hours. I wouldn't suggest holding this over earnings, but I'm looking for a breakout, and it's up to you if you want to hold this over earnings. It's a very fast growing company, and it's one of the fastest growing companies, on the exchange that makes sense for investors. I hope that makes sense. So as far as a trading opportunity, this looks good right now, right here, right now, even if it's up 3.5% from today. So definitely on any weakness, 33.75 would be a real nice entry point. Another name I'm looking at is Chipotle, and this is a name that I haven't covered, but this is a name I've traded for the last couple of years. And one, I love their food, and two, the stock has been going up, so it's been very easy just to buy the dips, buy the support, and basically sell the rally. So, and when I mean sell, I mean take profits. So what we're looking at here is, it's had a tendency to overshoot the 50 and 20-day moving average, which are the blue and red line respectively. But it looks poised for a move higher, and I would say if this does move higher, you can have a stop around 323, and which is the recent lows, with an expectation of a move higher. Now, if you had that same belief in prior trading in the past couple of months on Chipotle, you would have been stopped out, but it's a cheap shot. I think that you can, or another thing you can do is buy a little bit and disregard a stop right here. Sorry about this. disregard the stop at 323 and rather keep your stop under this point of control level. So call it 309. That's what I would say. It's not 310, that's an even number, but 309 is a good number. That's what is it? About $23 worth of risk. That's about 7% downside risk. So if this is a name you're interested in, I would buy. Don't pile into this. Buy a little bit, because you're willing to risk 7% on the downside for a potential move higher. So if this thing starts coming down, you feel free to buy the weakness, but just judge your cost basis, your risk in dollar terms based on having a stop at 309. So, and that's just because we've seen these bloops where Chipotle's taken a stab down and basically below the 50 and 20, and you would have gotten stopped if your stop was right under the 50-day. So, but I like the fact that this point of control here is at 314. Have a stop right below there. You should be all right, but remember, you can always buy it back. You also see this high volume area at this 323 level, which could be potential support. So if this does start moving higher, you're always, you can always have a partial stop on half your shares at this, I would say 319, and then have the other half at 309. So it's up to you, but Chipotle overall, it looks like, this thing just keeps going up, so I don't see why it stops here at 332. Another name I want to cover is DDI Corporation. DDIC is the ticker, and this is another high growth stock. And what I'm looking at here is we see that how obviously we had our rally, we had our topping pattern, which was the point of control forming at the top, and basically we formed higher high or lower highs and lower lows in the in the short term on this name, and then we had a huge breakdown, and we've been making lower lows, lower highs since. However, most recently we had a nice bottoming pattern. Point of control shifted to the bottom of the range, and we had a nice breakout to the upside. And what we're seeing now is this point of control for this 2-year chart. We're seeing almost a flag pattern in a way forming at this point of control. If this starts to poke its head up, I would say above 920, 925, then this looks like an interesting name. You can even have it at the most recent highs, which is 935. But if so, I would look back 1050 as a potential target. Really a little bit lower than that, perhaps 1035. But this one looks good, and it looks like it has some potential. Okay, GLD real quick. This we saw our bounce. We were talking about yesterday or Wednesday, one of the two, how this level, this 169 level to 175, that should be our range. We had a nice bounce off of 169, which you can see the volume, and it's part of November's value area. It's the value area low. So we saw a nice bounce, and now we're back at those highs. So it'll be interesting to see if people sell into this, but the trend is higher, and on uptrends people buy the dips, and uptrends make higher highs and higher lows. So watch out for it. And yeah, after all, gold, it does continue to move higher. So I don't suggest selling. If you took profits on gold like I recommended on, I believe it was Wednesday, then that's fine. That's you're just managing risk, and you can always buy back in. So if you're interested in getting long gold again, wait for an opportunity. Hopefully we get another opportunity around the 170 level, and that's your trade. Okay, let's also cover silver. Why cover gold why cover gold and not cover silver? I like silver, actually. It's it's interesting. We see this triangle pattern that's formed, and this could be one of those things where we have a nice breakout to the upside on silver. You see the point of control, it's no longer at the top of this range, rather it's in the middle. And because of today's action, if silver starts to get going, you have to jump on this. One thing I would recommend is maybe buying some out of the money calls with expectations of it basically to recover the losses that we saw back in September. So as far as upside target, I would say 37 to 38. So maybe a trade you can make is if you're an options trader, buy the 35 or 36 calls and look for appreciation up to around 37, 38, and that's when you take your profits. If you just like to buy the shares, that's fine. Buy some right now and with expectations of a breakout, and if this thing starts going, go ahead and start adding on to your position. But this position, silver, it looks really good and it looks poised for a move higher. I want to cover First Solar again. I covered it last night from a request, and just to follow through, it's up 2% today with the rest of the market. I still think it looks interesting for an upside pop. Your target would be 53 to 54 on the upside, and then if it breaks above that, then $60 is your price target. But I like the fact that this point of control is at 48. Give it a little more time, but if it starts to poke its head above, you have a pretty good upside range on this stock. And you just keep your stop basically, I wouldn't say below the most recent lows. If this thing starts to get going, I would have a stop under the point of control, so I would say right under 46, which is right around where this closed today. First Solar. And the last name is RIM, and I don't like to cover these names that have made downtrends, but this does look very interesting. We're seeing a bullish wedge pattern form, and I think we could see an upside breakout on this. And if we do, you have a target up towards 23 to 24, and then ultimately your target would be 28 to 29 on the upside. So this is a name that, and it can move quick, so it has a lot of potential. It was up over 5% today, almost $1. I think this is a trade that you can look at. Don't take it off your radar. But, overall, it looks like no matter what, the market will be driven by Europe and by, what the news flow out of Europe. You can see, just pulling up the euro real quick, we saw our failure at point of control, spot on, big sell-off, and now we're still struggling. And for the month of November, we are back at that point of control, and for now, we have selling pressure into that. So watch out. There are some mixed signals, but it looks like there are some opportunities also. So manage your risk, wait for patterns to develop, and basically take advantage of what the market's telling you. And if that means that sitting on your hands and not making any trade, then that's a trade in itself. So anyways, one other thing, unfortunately, the website, it looks like it may be postponed for the next week. So free videos will be still coming out, these lengthy videos. I hope you enjoy them. Feel free to leave feedback if you enjoy them. I appreciate it. And let's get them on Monday. Have a good weekend, everyone.